You are listening to ChartingWealth.com for Wednesday, the 20th of April, 2016. Let's jump into the market, still going our way. I'm so happy for all of you who've been doing these very successful virtual trades as the market continues to go up. No necessarily good reasons for that when looking at everything all together, but you know what? We keep saying you pay attention to the charts, not the noise. It is the charts that guide you, whether common sense, reason, whether what you see going on in the world makes any sense. It is the charts. We always start with IYY. What is that? Well, that is basically the total market. It is an ETF, an exchange traded fund that tracks the whole market. It's what we always look at first on our long chart. That is our 2-day chart. We see 4 up green open box candles, the Heikin Ashi, which means average pace in Japanese. And it is a type of candlestick pattern that we use. Well, it's not a pattern, it's a method of calculating the candlesticks. It's different than the regular high open, low close. It's calculated differently. What we like about it is it does average out, and it gives you a much better feel for the movement in the candlesticks and the patterns of the price, and it's a much clearer, cleaner feel for exactly what's going on. So what do we have? We have 4 up candles. We're well above the 2-day trend line. In fact, we could probably draw actually a better trend line at this point. Why? Because we are so far below it. With the old pattern that we had drawn, we can actually connect 3 good candles, which we have done, and we now have a signal line that starts on the 14th of April and goes through the movement at the close of the day on the 19th. We have 3 candlesticks connected, so the total market was up for the day 0.28%, so a little over 1/4%. We're still, I'm uncomfortable with how close we are between the MACD and the signal line. They are very close, running parallel at the top of the chart, but derivative oscillator continues to gain speed, and we continue to see price movement. And when we drop back and look at our 4-hour chart, what do we see? Well, we saw our get-in point was back on the 13th. That was Wednesday of last week, the 13th. We saw the jump-in point, and we have gone up considerably from there. You could have gotten in at a high of 103.52. The low was 102.28. And as the charts hit the high over the course of the day on Tuesday, it was up as high as 104.87. Not bad. Not bad for less than a week. Now, we can see we're well above the 2-day trend line on our short chart. We crossed over going up back on the morning of the 13th. And we do see our derivative oscillator losing some energy. We still have about the same separation we've had over the last 2 days between the MACD and the signal line. That's a moving average convergence divergence indicator. It's the main one we use. All these terms of art that I use on the program, I encourage you to go to our website, chartingwealth.com. We've got training videos for you to take there. Also working on a book that we should have out soon. In fact, I'm going to break the chapters down and put those into videos to put on the website for you. I think you will enjoy it. I'm working on one of those after the program today. So that's where we are on the total chart. How much does the S&P 500 is depicted by SPY? How close is that to the IYY for the day? Quite similar. We have 3 connected candles. We're still up on our MACD, our signal line, derivative oscillators gaining energy. We're still so danger close. If we look back around March, say the 7th of March or so, we had a nice wide disparity between the MACD and the signal line. Whenever it starts getting really close, like it started around the 8th of April, again, I'm just ready to react quickly in case the market loses its energy and really drops on us. So just be aware of that. We're going to look at the 2-day chart, from the 2-day to the 4-hour chart, the half day. And again, we can see up movement strong in the morning, weakened in the afternoon, but still left the market up for the S&P 500 0.32% derivative oscillator pretty much stayed the same throughout the course of the day. That is where we ended the day on the S&P 500. Now let's look at the Qs. What is the Qs? It's the QQQ, the cubes, some people call it. It's the NASDAQ 100, the technology stocks. We have a long-running two-day trend line. Even though the Qs was down 0.61% for the day, still above the two-day trend line. You need to pay attention when you start seeing down movement, when you're as close as you are between the signal line and the MACD at the top of the chart. Derivative oscillator has lost a great deal of its energy, so be cognizant of that if you are in a Qs trade or investment at this point. If we look at the 4-hour chart, what do we see? A large drop-off in the afternoon, penetrating the two-day trend line, closed above it, crossed over going down on the 4-hour chart. So we had some great opportunities to do well in the Qs. The jump-in point was somewhere around anywhere between 109 and 111, and the Qs hit its high at about, well, somewhere around the topping off around 111 or so, and then it's sort of slid sideways. We've talked about that, still above the two-day trend line. Again, be careful, pay attention to what's actually happening in the charts. Let them lead you. So just be aware, be careful if you're in a Qs trade at this point with as close as the two-day trend line is to crossing over going down, and at the same time with the 4-hour chart having already turned over going down. So pay attention. Again, like we say over and over, a short chart move does not make a long chart move unless it is a huge down pull at the end of a run, which we could be coming to. Again, pay attention. So lastly, we're on the two-day chart. We're going to go to gold. What is gold doing? Gold was up 1.56% for the day. We're still on our two-day chart below. Our MACD has not crossed over going up yet, although it does appear to be getting closer. Derivative oscillators losing energy. A nice up move on the latest two-day candle. Still hasn't recovered from the down moves, the crossover going down on the 15th of March. So about a little over a month ago when that down move started, even with the up move throughout the course of the day, still don't have enough to have switched the MACD over into the positive, nor the derivative oscillator. If we look at the short chart, what do we see on the 4-hour chart? We see that it crossed over in the morning on the 19th and a little bit of down movement in the afternoon. So we have the short chart having crossed over going up, and maybe if it's enough up movement, it can pull the larger chart over. That hasn't happened yet. A little schizophrenia in there. Down big chart, up short chart. What does that mean? It means you don't have a trade yet. That is where we are as we close the market on Tuesday the 19th, going into Wednesday the 20th. We always love to hear from you. If you appreciate what we do, we ask you to do one thing for us. It'd help us out a lot. Go to iTunes. Subscribe to our podcast. In fact, both of them, the weekly video podcast we do and also the daily audio podcast. Give us a 5-star rating. Say something nice about us. We would sure appreciate it. First priority, of course, is to the daily audio podcast if you only have time to do that. Subscribe to that. Say something nice. We really appreciate you. We appreciate being able to offer you this every day, engage you, get you excited about the possibilities that are endless. If you know how to read a chart, it is the key to the market. It is the key. You need to learn this. You need to practice it a little bit every day. Listen to our training videos. Follow with us every day. It's some of the most exciting stuff you're going to do. Commit yourself every day to doing this. If you will learn how to do this. But you've got to spend that time every day concentrating on this. Not long, 10 minutes. It's all we ask. If you do this, you will see results. You will be amazed at the power you get from this. And at some point in the future, you're going to know how this works. You're going to be able to look at these charts and read them. You're going to be able to jump in with your own money, making your own decisions. And you're going to be able to be the master of these charts. So please, please spend a little bit of time wisely every day. In the meantime, do the practice trades. Be a virtual millionaire. Open yourself up an account at any of the online brokerage firms. Put in $1 million of virtual currency. Start trading it. When you turn yourself into a multimillionaire, you might consider using some real money. Thanks so much. We love to hear from you again from chartingwealth.com.